Hello and welcome to the day ahead. It's Thursday, May the 8th. I'm Andrew Gagan. Well, the local share market is set to open slightly higher this morning, with ASX futures up around 0.1%. All eyes were on the US Federal Reserve this morning as it kept rates steady, pointing to the risks of both higher inflation and unemployment as it tries to measure the impact of President Trump's tariff policies. On Wall Street, trading was choppy before and after the Fed decision, which was expected by the market, while sentiment was boosted on optimism that the United States will reach deals with trading partners. Stocks jumped late in trading as the Commerce Department confirmed that the Trump administration plans to loosen restrictions on the export of advanced AI chips. Among the Mag 7, Nvidia, Microsoft and Meta all rose. The Dow was boosted by a jump in Disney shares after the entertainment company's quarterly results topped expectations. Google parent Alphabet closed down heavily and served to pull the S&P communication services sector lower as the worst performer in the session. And iPhone maker Apple said it's exploring the option of adding AI search options to its web browser, citing an executive. Apple shares ending slightly lower. Advanced Micro Devices gave a strong revenue forecast, while Supermicro Computer fell on a disappointing projection. And Uber reported weaker than expected quarterly gross bookings, citing lower US inbound travel. That's led to slower gains in its ride-sharing business. Well, the Federal Reserve has held its funds rate steady as widely expected, and regards the US economy is still solid, with Fed Chair Jerome Powell emphasising patience.
In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. The risks of higher unemployment and higher inflation appear to have risen, and we believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments.
The Fed's outlook highlights developing risks that could leave it with difficult choices in coming months.
I don't think we can say, which way this will shake out. I think there's a great deal of uncertainty about, for example, where tariff policies are going to settle out, and also when they do settle out, what will be the implications for the economy, for growth, and for employment. I think it's too early to know that. So, ultimately, we think our policy rate is in a good place to stay as we await further clarity on tariffs and ultimately their implications for the economy.
Meanwhile, US Treasury Secretary Scott Bessent has described a meeting with Chinese officials in Switzerland this weekend as negotiations, adding that it's just the beginning of the process. Well, US Treasury yield slipped after the Fed decision as it noted that the risk of higher inflation and unemployment has increased. The US 2-year Treasury yield falling to 3.76%, the 10-year down to 4.26%. Markets now pricing in a 20% chance the Fed funds rate will be cut by 25 basis points at the next meeting in mid-June, but 5 more cuts in this easing cycle. The US dollar index up more than 0.5% on the day, and the Aussie dollar, that's fallen back to 64.3 US cents. And Bitcoin is trading around 97,000 US dollars. Oil prices have headed lower again on doubts that upcoming US-China trade talks will result in a breakthrough, while hopes for an Iran-US nuclear deal eased supply concerns. Brent crude futures down more than 1.5% at $61 a barrel. Copper's fallen close to 3%. Iron ore up to $100 a tonne. And gold has extended losses weighed down by a stronger US dollar and easing US-China trade tensions. US gold futures settling almost 1% lower at $3,391 an ounce. Well, it's quiet on the data front today, while on the corporate calendar, ANZ has reported a 12% increase in cash profit of $3.6 billion. Orica and Light & Wonder are also reporting. And that is your day ahead. We'll see you again tomorrow.